Out of crisis and catastrophe comes opportunity, yeah. For real change in the world economy, to reduce vulnerability and inequality. So we coming together virtually to expand opportunities for developing countries. At UNCTAD 15, we're solving trade issues, youth issues and gender issues too. Civil society and creative industries are part of the call to bring prosperity for all. Small island, big ideas, much more than the beach. Small country, big reach, touching the world virtually. We might be small, but proud people standing tall. Creative and hardworking, we bring Barbados to you. You can't come to Barbados, we bring Barbados to you. If you can't fly to Barbados, we take Barbados to you. If you can't get to Barbados, we get Barbados to you. UNCTAD, Barbados welcomes you.
Good afternoon, good evening, and I don't think we have anyone in a time zone where I need to say good night. My name is Gillian Marcelle, and I lead a capital advisory practice that specializes in blended finance. But today, my role is as the moderator of a panel that will look at transforming finance, investment, and entrepreneurship as part of the inaugural Gender and Development Forum. I am beyond excited to introduce the panelists who will be addressing these issues, and also to share some perspectives on why we believe this is so important. We are joined today by Ajaita Shah, by Lauren Rawlings, by Sanola Daly, Tina Bile Williams, Polo Lateca, and Jessica Espinoza. We're coming from many countries around the world, and the perspectives that the panelists will bring to you will explain as well as provide solutions for why we believe there is a fundamental misallocation of financial capital in today's world, that the existence of that problem contributes to inequality and does not contribute to the theme of prosperity for all, which is what UNCTAD will be addressing as part of its meeting. The Gender and Development Forum was the vision of the Honorable Udine Barito and Tonya Haynes, and got off to a good start today. There's a fantastic lineup of other sessions over 3 days. But finance and financial capital lubricates the international development world. And so we felt that it was really, really important to explain and to share some solutions on why there is this persistent gap in financing the SDGs. I think the recent estimates are $100 trillion, and that's trillion with a T. Why in the financial sector, which is a very important sector, there has been a persistent gap and disparity in terms of the occupations where women are present. And that is particularly true at every level, but certainly at decision-making level. Why there continues to be a problem in terms of access to capital that is equitable and fair. And the good news is that we actually have solutions to those challenges. And so the panel that has been assembled represents women who are actually working on those challenges as we speak with great success. That doesn't mean that everything is solved. Far from it. We have a lot of work to do. But it does mean that when the world rallies to the cry that the Honorable Mia Mottley sent out so eloquently at the UN General Assembly to stand up and give your solutions, that if we are not approaching the caliber of talent and the caliber of insights represented by the women here, we will actually be missing out. And so when the world takes up that challenge, because we are all flocking to Barbados for a vision of what global leadership should look like, we have those voices. We need to be paying attention to these examples. And so for the rest of the 90 minutes, we will be presenting you with solutions. We will be presenting solutions not only for women's participation in a finance and investment sector. That's too easy. We will be presenting solutions for transforming the finance and investment sector, because that's what needs to be done, folks. I was looking back at, because I'm always excited to be working with UNCTAD. And I was looking back at the first encounter that I had with UNCTAD, and it was actually in 1993. So that's 28 years ago. And that was an encounter where UNCTAD set up a working group to look at gender in science and technology. The book is called Missing Links. And the reason I speak about that is that the recommendations about what we need to do to solve the gender gap in science and technology from 28 years ago are exactly the same ones that we need to be reflecting on in finance, investment, and entrepreneurship. So UNCTAD and the international community has had solutions, has had recommendations. What we need to do is to implement. What we need to do is to recognize that the same individuals, the same mental frames, the same values that created the problems are not the ones that will provide solutions. Prosperity for all is a fantastic rallying cry. What we need to do is widen the solution set so that we can actually accelerate progress towards that objective. And with that, without further ado, I want to introduce this panel of uniquely qualified and accomplished women to take us into this discussion. Ajaita Shah is the founder and CEO of Frontier Markets. And Ajaita is a social entrepreneur who has been successful at navigating the raising of capital. And so Ajaita, over to you to introduce yourself and to also say about what you will be focusing on the panel. Ajaita.
Thank you so much, Gillian, and what a wonderful opening. So good morning, good evening, good afternoon to everyone. My name is Ajaita Shah, and I'm the founder CEO of Frontier Markets, speaking to you from India. What we've done at Frontier Markets is we've invested in rural women entrepreneurs to build strong businesses across India. We've invested in 10,000 rural women entrepreneurs to become social commerce entrepreneurs in their villages, to connect solutions in climate, agri, and finance, truly wanting to help and give back to their communities. 10,000 women today have earned over $15 million of income and have helped over 500,000 families connect to over 4 million solutions in agri, climate, and finance, truly, really addressing a lot of the sustainable development goals. in a way that's also allowed them to have economic agency and build back to their communities. So I hope to bring to this panel a perspective that looks at why investing in women can be smart business, but also the key to achieving our sustainable development goals via businesses at scale. Thanks.
And then next we have Lauren Rawlings, who is the Director of Economic Growth, the Economic Growth Practice at Palladium, a Washington, D.C. based consulting group, who, in addition to working at Palladium now, has also had some time at the International Finance Corporation and with other management consulting organizations, and is a really passionate believer in, amongst other things, employee-owned businesses. Over to you, Lauren.
Great, thanks for that, Gillian. First, I'll say that I was born in the U.S. to an American mother and a Caucasian father, so I'm especially pleased to see Barbados hosting UNCTAD 15. Very, very proud of the Caribbean for landing that, and really pleased that the world would recognize the place of the Caribbean within the global family. I was educated mostly in the U.S., but I did spend 3 really important formative years in St. Kitts, first through third form, and that's really radically altered my outlook and continues to shape the paths that I choose. So as Gillian mentioned, I'm currently a director in the economic growth practice at Palladium. I design and direct projects that provide resources and opportunities to traditionally excluded groups and communities. And I also lead research projects on these topics. I did work at IFC, leading a program across 4 countries that was focused on bringing women, female entrepreneurs, and rural entrepreneurs into the distribution networks of major telecoms operators. Between stints in the development sector, I did spend 5 years in management consulting, working in the US with Fortune 100 multinational corporations on some of the most pressing strategic challenges. I have been a transaction advisor on several multi-million-dollar merger and acquisition and other investments, largely focusing on ensuring equity and justice for communities and for employees. So over the course of my career, I have pivoted from trying to make sure that women and rural communities and micro and small enterprises and traditionally excluded groups and communities have been included in existing networks of finance, existing supply chain networks. And while that has been important work and good work, it's been incomplete and inadequate if we're going to achieve prosperity for all. And so one of the things I'd like to really talk about is the importance of feminist perspectives in underscoring the need for us to completely change the ecosystems, change the processes, change the power dynamics, and change the outcomes those systems are designed to achieve. Thanks, Jill.
Excellent. Thank you, Lauren. And it is certainly my pleasure to introduce Sonola Daly. Sonola is currently at the IFC, where she is the gender lead in the manufacturing, agribusiness, and services department of the IFC. And as she will explain further, that work takes a gender analysis into the advisory work that the IFC does with businesses. My understanding is that it's both the portfolio companies in the IFC, as well as the firms that may be in their supply chain. Sonola?
Thank you, Gillian. Thank you so much for the opportunity. It's a pleasure to be here and to have this conversation about prosperity for all. And also, like Lauren, I'm very pleased that this is being hosted by the Caribbean. I am originally from Jamaica, so for me, this is just kind of like a coming home. So thank you for the opportunity. So yes, I am the gender lead for manufacturing, agribusiness, and services at IFC. We work with investment and equity investment clients who also get either long-term financing through loans or equity investments. We also provide advisory services, and a lot of the times, some of the work that we do with looking at a gender lens is through the advisory services. So we work with our clients to understand if IFC is investing in you, why it is important to look at gender within your operations. So including in the workplace, but also in the value chain, with working with farmers and other producers, but working with women-led companies as well. So for us, it's extremely important. And to give you an idea of the scale, in 2019, our manufacturing programs worked with, created 23,000 jobs for women. The clients that we work with in agribusiness worked with 3.5 million farmers across the globe and created 115,000 jobs for women. So these are really important numbers, and I'll talk to you about why we have different programs like the Women's Employment Program, going back to the workplace, women in agricultural value chains to help increase the opportunities for women farmers in those value chains, and also supporting women-led companies through what we call the Access to Markets pillar of the work with the Women Entrepreneurship Financing Initiative. So thank you, Gillian, and I'm looking forward to this conversation.
Thank you. Moving along to Tina Biles-Williams, who is the Chief Executive Officer of Exponents, which is a $12 billion multi-strategy investment company. And Tina has been sharing with us her why. Why did she move on from managing the portfolio of the Philadelphia pension fund into setting up a bespoke investment management company, and some of the achievements of that company. So over to you, Tina.
Thanks, Gillian. And as Sanola and Lauren, I'm also a child of the Caribbean. I'm from Jamaica, so this is indeed a pleasure. So I founded Exponents 25 years ago. We currently manage $13.5 billion over a range of asset classes, from fixed income to equities, from public markets to private market strategies. The company's mission is to generate investment excellence and performance alpha for mostly institutional clients through a different paradigm, and that is a firm led and managed by diverse and women professionals. That, as Gillian mentioned, that founding kind of narrative came from my time as an asset allocator back in the late 80s and early 90s, when the exclusion of women and diverse firms and professionals, from my perspective, was not only problematic from a social equity perspective, but it was problematic from an investment perspective, because I was receiving an incomplete universe of investment options. So when I started Exponents 25 years ago, it was simply to change that paradigm. And so, over almost 70% of our professionals are women or diverse. Of the 200 investment products that we've seeded, 60% were offered by women or diverse founders, firm founders. So my goal for this panel of remarkable women is simply to not only point out the challenges, of which there are many, with respect to gender equity, but to participate in a discussion around actionable transformation.
Actionable transformation. That is music to my ears. And next, we have Paulo Leteca, who is the chair and founder of IDF Capital, managing partner and co-founder of Aletha IDF Managers. And our discussions with Paulo will pick up on the capital allocation theme that Tina has begun. Over to you, Polo, to introduce yourself and say what you are going to be bringing to the panel. Thank you so much.
Great. Thank you so much, Gillian. And I'm really looking forward to an interesting conversation with these powerful women that are on my screen. Unlike the other ladies, I am not from the Caribbean. I'm from South Africa. But I think there are a lot of similarities between us and yourselves. So I feel like I'm home too. Thank you. So my background is varied, but I think I will just share briefly with you the work that I used to do for the South African government after our first democracy in 1994. We inherited a country that was racially divided, as I'm sure many of you will know, where a majority of South Africans were actually excluded from participating in the mainstream economy. So I was one of the cohort of policymakers that were tasked with coming up with economic development policies that were intentional about inclusion from a racial perspective as well as a gender perspective. So I have an appreciation of the importance and the need for intentionality of inclusion of those who have been previously marginalized. And in 2008, we decided to establish a firm that was going to be looking primarily at investing in women-owned and led businesses, so that we could, contribute towards the inclusion policy that government had, of course, come up with. And since then, and I think what really enabled us as far back as 2008 to have a gender-focused fund was that our government policies actually enabled it. And I think it is important for us to just be mindful of that as we go into the discussions around what should UNCTAD and other similar organizations do. We have to date, we manage funds just under $140 million US. We have funded close to 300 businesses. And we are quite intentional about using what we call the gender lens investing strategy to invest in our businesses. And the importance, of course, of the strategy means that we look at women beyond just ownership, but we look at them across the whole value chain, which is a very important component if you are serious about unlocking the full potential of women across the whole economy. So my focus on perhaps the key takeaways for me will be a discussion around intentionality, around how do we measure, because they say what gets measured gets done. Thank you very much, Gillian.
Thank you, Polo. And last but certainly not least is Jessica Espinosa, who is the Vice President for Private Equity and Venture Capital at DEG, the German Development Finance Institution. And today is your elections, Jessica. So it's an important day. And she is on this panel as the chair of the 2X Challenge, the 2X Collaborative, which I'm sure she will explain a little bit more about, because that's a very, very significant effort in the landscape of transforming the financial sector to benefit women and to promote gender equality. Over to you, Jessica.
Thank you so much, Gillian. And hi, everybody. It's a great pleasure to be here with you today. So as Gillian already mentioned, I'm Jessica. I'm the chair of the 2X Challenge and co-chair of the 2X Collaborative. And these are two initiatives at the forefront of gender lens investing that you may have heard about. The 2X Challenge was launched initially by a group of development finance institutions at the G7 Summit in 2018. And that was the first time that our own institutions went out there, gave ourselves the challenge to apply a gender lens to the way we allocate capital. So really looking at our core business, at the DNA of our institutions, and being intentional about gender and a gender lens. It has been a very interesting journey. Back then, we gave ourselves a collective target of 3 billion over 3 years. So by the end of 2020, we wanted to collectively achieve 3 billion. Everybody at the time in 2018 was extremely nervous because this was the first time we really did this with intentionality. But the business case and the impact case that we'll dive in this panel really materialized very early on. And so at the end of 2020, we stood at 11.4 billion, which was mind-blowing to all of us and really helped establish the case. It really showed the ripple effects of investing in women and in gender smart businesses. And it has attracted a lot of very commercial, really the full spectrum of investors who are now engaged in the 2X collaborative. And I'm particularly excited to see the innovation that is coming from the Caribbean. And we have very strong partners in the new 2X collaborative that are engaged there. So on this panel today, I would like to focus on this shared journey on the crowding in of other investors and really shifting capital, as well as share some lessons about how we can be really transformative in the way we do gender lens investing and what is necessary.
Excellent. Well, thank you, colleagues. I think we've already started the discussion because there are a number of themes that have come up that I want to come back to. And one of them is intentionality. The other is transformation. But one of the things that has definitely come up and is that it's fine for women who are in the finance sector to speak about inclusion where participation at varying levels of seniority is the goal. That's one thing, and that's important. It is, however, quite another for us to be very, very focused on systems change in the financial sector so that it benefits all women. And we ran a poll in the lead up to this panel, and Finance for All won. And you know, the discussions with certainly the folks who define themselves as academic feminists or gender and development advocates is sometimes to be sometimes a little dismissive of women in the finance sector, because the worry that they have is, how does this benefit women in the informal sector? How does this benefit women who are still struggling? How does it benefit entrepreneurs who are looking for startup capital? So I would like Lauren, Sanola, and Polo to give your responses to that challenge as to, it's fine, you know, you assemble a group of powerful, accomplished women, many of whom are from the Caribbean, to discuss these issues. But, you know, where does the rubber hit the road? So let me start with Lauren, and then we'll go to Sanola, and then bring in Polo on that question.
Sure, thanks, Gillian. I think you know I really like this question. So for me, it starts with some of the language that we use. And for a long time, the part of the sector that I work in really spoke about access to opportunity and inclusion. And it's been clear that's simply inadequate if the objective is economic justice, if it is indeed prosperity for all. It seems to me a real missed opportunity for us to have engaged with feminism, right? And many of us call it the F word, not to be clever or provocative, but because feminism has been treated as taboo in too many parts of our sector. And so I'm not trying to use, not just to be clever or provocative, but treated as a taboo. And I think we engage with feminism because it has a long history of robust activism and scholarship that is really about justice, including economic justice for everyone, for men and women, for all of our LGBTQ, siblings, for people from the global north, the global south, for, whether it's about class, within a space, indigenous people. It really is about economic and other forms of justice. And so making sure that we bring that work and that long history of scholarship and activism is really important to question the power dynamics, the processes, and frankly, even the defined stated outcomes of our systems to ensure that we indeed are focused on being very intentional about ensuring it's not just banking on women, investing in women entrepreneurs, that is, as Polo has said, being really clear and intentional that if all women and all people do not benefit, right, we have no chance of truly achieving prosperity for all. So it seems to me feminism is important because of the inclusive way it is intentional about looking at various kinds of communities and not just trying to bring a few folks to fit themselves into existing structures that are not built for them, often not hospitable to them, right? And might be able to cream off potentially a, Western educated upper middle class slice of an excluded group, but really is not going to drive prosperity for all. I can say a lot more about this. I'm going to pause there. I know everyone else has some great remarks.
Excellent, thank you. And Sanola, when you are doing this work, how do you make it count for women who make up a large proportion of the global majority and make it work in ways that count?
Thank you so much for that question. And there are a couple words that came out of the poll and the question that I wanted to touch on. Informal. That strikes a really important word for me. There is a lot of, so many women work in the labor force, either informally or formally. One of the things that excites me about working in manufacturing, agribusiness, and services, a little bit separately from the traditional finance, is that you get this opportunity to look at what is going on in the formal workplace and how women are represented in the formal workplace. We know that globally in 2020, 47% of working age women globally were in the formal labor market, which means a lot of them are in informality. We also know that only 28% of managerial positions are held by women. So that goes back to the power dynamic and the structure. So really quickly, with the Global Women's Employment Program that we're leading at IFC, one of the things that we're doing is with clients, multinational companies, domestic companies in a range of industries from manufacturing to healthcare, to tourism, to agribusiness, is that we're looking at our companies and we're saying from a numbers perspective, what do your dynamics look like internally? What are the underlying causes for those dynamics? And what can we do to change them? And we work with the companies to understand their own structure. So we're giving them a business case, but it's theirs. It's not the global numbers. It's what's going on for you. Why is it like this? Why are women getting to this level but not moving any further? And so we found that when clients get those numbers, have those conversations, the dynamics start to change. The things start to break because there's a consciousness that starts to happen that they didn't have before. So we really, really spend a lot of time working on that. And that is one of the things that really excites me about what we do, because you see the change, right? They're micro changes, but you see them. And then on the informality, one of the initiatives IFC is doing right now that we just kicked off is looking more at inclusive business, but looking at the intersectionality of who is at the bottom. So gender, but also race. And why do we have these informal systems? How are women, for example, not benefiting? How are they left out? How are they excluded? And so we're starting to do a lot more work on that area, but also on the intersectionality. So in about a year or so, I'll have a lot more to say on this, but we're starting that work and we're pushing. So I'm really excited about trying to change that informality as well. Thank you.
So I'm going to bookmark that when we come to Ajaita, but I wanted to bring in Polo on this point before I move to the other panelists.
Oh, thanks, Gillian. I think, first things first. I made an analogy the other day about any economy that is serious about economic development and prosperity has to also be mindful that you cannot achieve your full economic potential if half of your population is not productively engaged in growing that economy. So it's a very important point to make. And I think once you've made that point, the rest of the argument becomes that much easier. What we have seen, Gillian, is that the face of capital is exceptionally important. What I mean by that is we found that a lot of women entrepreneurs actually feel that they do not have permission to go and seek capital because capital is seen to be for the boys and not for women. So we have to be very intentional about building a pipeline of women finance professionals and be unapologetic about it. And we've seen this with our firm where when we started in 2008, we actually struggled to find women-owned businesses to back. And what we started to do was to go where women are. I think Lauren made a reference to language. We understood that, women will not be at the rugby matches, will probably not be at the golf club or at the bar with the boys on a Friday. But women have got their social, platforms where they engage. And we had to be very intentional about going to where the women are and understanding in their language what it is that they're looking for and translating our language to what they could, understand. And that completely, flipped the type of businesses that started coming to us. In fact, in 2015, we were sitting with 72% of our businesses being women-owned. Over time, we've gone down a bit to about 52%, but we're quite intentional about that. And I think that one of the things that we've also been saying, and this is such an important thing, so a lot of reports talk about the low levels of banking on the African continent, right? So on average, African countries have got about 25 to 30% of their citizens banked. In South Africa, we managed to turn that on its head, and we're sitting with about 81% of South Africans being banked. But we said, let's look at what this means. What does it mean when we say people are banked? What we found is that people have opened bank accounts, they deposit their salaries into those banks, and then the following day they take the money out. Can we honestly say that this, the banking system is responsive to the needs of your typical South African? So we actually need to challenge some of these things to say, what does that mean? Is it because the financial products that we have are not talking to the people that need to use them? And that, for me, that is something that I feel very strongly about, that until you've got people who look like your ordinary people on the street and understand their needs, their savings needs, their banking needs, their insurance needs, we will never have financial products that are responsive to the needs of your ordinary people. And that's why flooding of the gates of diverse people is such a critical economic policy objective for all of us to want to achieve, because I think it is that way that we will start even seeing a significant improvement in the levels of savings. Because whilst South Africa has got 81% banking, we still have one of the lowest savings rates in the world. And it's precisely because our products are not responsive to the needs. So I can talk about this forever, but I'll stop here. But I'm sure my point has been made. Thank you, Gillian.
Great. Thank you so much, Polo. And so much of this is just weaving together. I wanted to bring Ajaita in on the issue of providing capital and other kinds of services to women in places where the traditional financial sector doesn't reach. So Ajaita,
absolutely.
That is your superpower.
Yeah, of course. I mean, I have to tell you, it was very hard to contain myself while I was listening to all these amazing comments that were coming in. So first, I'll just say one thing. My entire career for the last 20 years has been about looking at the paradigm of the underserved and the poor with a very different lens, right? We have to understand that even in the India context, we're talking about 800 million people that are underserved or underbanked. That is a market. That is a massive economy. And ultimately, if we start looking at it with a lens of dignified customers versus beneficiaries, things change. Then the second you add the lens of gender inclusive with a lens of not let's give a livelihood or let's give her whatever an opportunity that exists, but see her as an asset, as a service provider, as a connector, as a social influencer, everything changes. And I think that's literally what we've done in India. And I've seen a replication around it across the world because we're coming in with a very different perspective. So what we've done through our lens is we've said, we understand there's an 800 million person market that's undertapped, underserved, and you have to start looking at the same way that we look at data on urban markets or well-established consumers. Imagine if you were able to leverage that same kind of lens of data on rural people, on rural women, and actually get to know them with an obsessive lens of saying, you are the it customer, you're the it solution provider, you're the it economy for all of us to start thinking about things in a different lens. And once you do that, it's a game changer because you start getting insights about women and how they see what they want and how they want it. And if you design according to that massive volume, it is an incredible multi-trillion-dollar economy that we've not been able to successfully tap. So at Frontier Markets, we literally did that. We looked at women as social influencers. We gave them the digital solutions that they needed, and they started going wild collecting data. They collected data on 3.5 million households that were literally telling you about what kind of products and services they needed to address their life solutions. Once you did that, and you go to any market provider and you say, who wants to give a loan worth of 30, 40, $50 million fast with a good ROI in return, it happens, right? So somewhere or the other, I think what we're doing incorrectly is when we're not understanding how this is a market lens and these are influence and service providers. So we've done this now in the sector for agri, insurance, products. We've done this for climate. We've done this for clean energy. We've done this for digital financial transactions. And the most exciting piece about this is that the same women that we call unbankable because they don't have collaterals and because they're not necessarily fitting to our mold, all of a sudden they have this track record of data and influence that allows them to become supremely bankable in a way that's incredible. So whenever I hear someone go, pipeline challenges, don't know how to disperse capital, how do we tweak our languages? It's actually more about us looking at data differently, looking at the market differently, and looking at rural customers and women differently. And I can see us changing that at a very exponential way. So I was holding back for this very question because I knew there's an ability for us to kind of think differently. And, you know, historically, we've done this at like $30, $50 million. But when I look at what the scale potential is, even at Frontier Markets, we're about to scale this to 100,000 women entrepreneurs with 100 million customers. And all of a sudden, you're going to say, who needs to disperse $1 billion of capital faster on a gender lens perspective? And we can actually trigger that if we shift the lens and how we see all of this. So I'll stop there.
Great. Thank you so much. And in fact, that's a fantastic segue, because what I want to do for the next 10 minutes, we've talked about, we've talked about how we can use finance once we make these shifts to better serve women and men, for that matter, in underserved markets. But as everyone on this call understands, but some understand with acutely, institutional capital doesn't really get down to use of proceeds, right? You know, when you're doing a fund of funds model, there are other kinds of criteria that come into the mind of the person who is allocating capital. And we have on this call and on this panel, folks who have been successful at persuading institutional capital allocators to put their money to produce alpha. That is highly unusual. And I'm emphasizing that point because when the international development community is looking for solution providers and designers, they pretend that women who look like the ones on this call do not exist. And there is a small circle of people who are tapped to provide advice on how we can solve the misallocation challenges. And so what I want to do is to give Tina, Jessica, Polo, and any of the other members of the panel who want to chip in, the opportunity for us to spend 10 minutes speaking about how we solve the institutional challenges, which I have argued consists of bottlenecks and blind spots, and the failure to do what we've been hearing from this panel, which is to design financial products responsively. So Tina, over to you, and then I'll route in Jessica and Polo. Institutional capital.
Mute myself first. You know, the answer is to draw on and kind of tie together what has been said thus far, and that is that women and, quite frankly, diverse communities and underserved communities, precisely in some ways because they are underserved and therefore are not heavily trafficked by, you know, traditional capital, provides an opportunity. I mean, there's kind of this theory, if everyone is chasing the same cheese, then, you know, capital efficiency takes hold, and you know, you have to pay up for what everyone is chasing, and so you go where capital is not. So in my career, I've always used financial terms and objectives and not social terms, because I deal with, you know, clients who have fiduciary obligations, right? And so, you know, and there's what's nice about today versus the early 90s, there wasn't a lot of data. And so you had to sort of talk in theory back then. Now you have lots of data. I mean, you know, American Express on the state of women-owned businesses found that women-owned businesses grew twice as fast as all businesses. And within that, African-American businesses actually, women-owned African-American businesses actually grew the most. And so, you know, so then you kind of say, why isn't capital going here when there is so much growth? And that's kind of the way I always kind of counsel people to go. Don't say, it's not about the right thing to do. It is the right thing to do, but it's the profitable and the alpha driving thing to do. And so, you know, one of the things and I think Sanola talked about this, is to look at, you know, if you think about what I just said, that African-American, Latino, and Asian businesses actually grew, the women-owned businesses grew the most. Yet that is, if you sort of did a mathematical equation, where the growth was is the exact inverse as to where the capital has gone. And so, you know, from an economic perspective, it's there is an enormous wealth gap in a country, in most of the Western world, that is still struggling to grow, yet they have these untapped segments of the economy that could provide new sources of growth. So in terms of solutions, again, I think language matters. And if you're going to appeal to institutional dollars, you have to speak in their terms. And their terms are, how am I going to, you know, meet my performance objectives, to pay my liabilities, and how does that narrative fit into that? And then, of course, you have to deliver. And that really is kind of what has driven our narrative and is behind our success.
Fantastic. Thank you, Tina. And Jessica, what have you used to account for the success of the 2X collaborative in terms of the pledges and so on that you've been able to acquire?
So for us, very similar to what Tina mentioned, it was very important initially to speak the language of institutional investors and to make the case to them. And for us, I think working in international development, it seems to be a no-brainer. We've seen the statistics. There has been a large body of evidence for over a decade, but it's not everybody in the investment space is aware of these numbers. So we really made the business case. We brought these numbers, for example, by McKinsey that has calculated that if women participated only in the labor force to the same extent as men today, global GDP would be $28 trillion larger per annum. So, these are, it's a huge opportunity. And what we've observed is both in traditional finance, but also in development finance, women have often been seen as vulnerable groups. And so, there have been these environmental and social action plans to do no harm, but they haven't been seen as an opportunity and as agents of change. So we showed the data, and that was both global data, academic data, but also from our own investments, really showing women as agents of change. And that has allowed us to really accelerate change very quickly and to change investment practice. But after making the case and also showing that SDG 5 is really a catalyst for all of the other SDGs, we also had to show investors how exactly you can do it. Because, it's one thing to understand it. Okay, they now understood the business case, but then how do you actually do it? And so we built communities of practice among peer groups. So all of the investment people together, engaging in peer learning, looking at examples. It was also often a learning, kind of the investors learning from the entrepreneurs and the entrepreneurs learning from the investors, right? So it also kind of leveled the playing field, or like these power imbalances between entrepreneurs and investors were also being transformed because there was learning on both sides, which I thought was very exciting as well. So I would say also looking at the opportunities of how we have defined the 2X investment framework, it kind of goes beyond just superficial opportunities or, kind of just ticking a few boxes, but actually looking where women participate along the value chain. So women as business owners and business leaders, women in decision making, so on the board of directors, on the investment committee, women in employment, but not only as a percentage of the workforce, but also looking at workplace policies and practices and how they are actually promoting gender equality or perpetuating inequality. So really looking at all of these more structural aspects as well. And then also women as consumers, so products and services that are designed with a gender lens. And, this also needed a lot of kind of educating, because we're not talking about the next lipstick. We're talking about reproductive health, about financial products that are designed with a gender lens so that they actually serve women and other underserved communities. And what is interesting, I think, Gillian, you pointed this out, when you apply this customer-centric approach to product design, it actually turned out that these financial products were also more appealing for male customers, because it was the first times that financial institutions actually asked their customers, what do you want? What is your challenge? What is your need? And that has been a very interesting opportunity. There have also been a few kind of more systemic barriers that we haven't been able to tackle yet, and happy to talk a bit more about that later on. But it has been interesting. And I think also what we've seen is we started speaking the language of institutional investors, but they are increasingly speaking the language of feminism, which I think is also very interesting if we think about transformation.
Can I add just a follow-on before Polo goes in? Just because in this context, there have been also platforms, right? Like Gender Smart Summit and other things that are actually trying to bring together more entrepreneurs that are female owned. So I found myself sitting in a lot of these forums because we realized that the barrier wasn't intentionality, right? It wasn't, you can't sit here and think that there are these institutional investors that do not believe that women need to be participatory in this world of change. The challenge was they really didn't understand how and why and what would be those metrics. And it was so interesting to recognize that the role of the entrepreneurs had to increase. We tend to focus on doing our work on the ground, and we actually realized that we had to become a part of the conversation and the dialogue in a different way, because we do understand how, and we do know the metrics. And so when we started co-designing solutions, it was very interesting to see where innovation came out, right? And so all of a sudden, even like the climate lens, so on the SDG side, even climate investors, as us as leaders, as entrepreneurs, we're asking these institutional investors, what is your gender lens? What is your gender portfolio? Are you in fact creating a committee or not? Companies, we're asking them, if you are interested in designing for the poor, do you have a product designer who has a gender lens? If you don't, we're starting to create systems of saying why we will not work with you, because we are actually also having to take the responsibility of navigating our own unapologetic gender inclusive perspective of doing business, which also means how you partner with financiers. So just wanted to add that piece as well.
Sure. And let me take off my hat as moderator and make a point as well. One of the things that we also need to do is we need to invest in the ecosystem builders and the ecosystem intermediaries, because they are also a vitally important part of the ecosystem. And so I think that that's also really, really important. Polo?
Yes, absolutely. I mean, I was just nodding my head when everybody was talking, because it took us 6 years to raise a fund to convince international investors that African women can run, scalable businesses. And when we started the journey, the language was we invest in women-owned businesses. And we were not able to convincingly link that to superior return, which is the point that Tina is making, that you need to be able to say that this is the business case, and that actually led us to having to develop this gender lens investing toolkit that I spoke about. And in the process, educating LPs. So you're quite correct, Ajaita, that we are now having the job of actually educating the very people from whom we are seeking capital. So we had to go through that process of educating, but also really codifying, if you will, and embedding. Very, very importantly, we've had to demonstrate how we embed the gender lens investing strategy throughout our whole investment process, from cradle, from the time that we do our first screening all the way to exit. So what do you do during due diligence? What do you look at? How do you put in place, policies and interventions to help the entrepreneurial businesses to embed, diversity across the whole value chain in their businesses? And how does that actually translate into alpha? We've had conversations with LPs, especially, us operating in developing economies, where we've said to them, well, the whole world is looking to put capital in developing economies. And the risk is that if you do not put capital in underserved areas, you actually are putting your capital at risk. Because if there's unrest, it doesn't matter that you backed some guy with the best business idea. If he is operating in an environment where people are unhappy, underemployed, or unemployed, or poor, you are actually putting your investment at risk. So we've had to do that education and really put it in a language that investors can understand. And I think I also agree with Tina that we're very fortunate now that there's a lot of data out there from credible sources that also supports the fact that diverse teams actually lead to superior returns. So I think we definitely are at a good place, but there's a lot of work that needs to be done. And the intentionality that we spoke about earlier is very, very important. And one of the things that for me, I would like to challenge institutional investors is as much as they take ESG seriously, like today you cannot raise capital without having a very clear ESG framework and an end. Similarly, gender lens investing has to occupy the same level of importance as ESG. And I think once we do that, and that's where the intentionality comes in, then we're going to see a significant improvement in the allocation of capital to this very important asset class. We often say to investors, you're leaving money on the table, actually. So, yeah, thanks.
You can definitely see the folks who have been out there selling, because one of the other messages is that, and the folks in this, we are also having a conversation with our academic feminist colleagues, sisters, and our gender and development colleagues. And one of the messages to that group or those groups is that in order to allocate capital for the benefit of women, we have to sell those ideas, those products, and those services. And so as women, we actually would have to get more comfortable in the role of selling. And that's often not something that is seen as appropriate. So that's one of the challenges also for our own community. But before we move on to, hopefully there have been some questions that have come in, I also wanted to pick up on one point, because institutional capital is not only leaving alpha on the table in terms of performance of their individual, their individual funds and so on. They're running a risk with beta. And I think, Polo, you were making that point as well. The macro factors that are affecting the performance of financial markets are affected by social inequity. And there's no doubt that gender injustice, whatever is the absence of gender equity, significantly affects how societies perform. And this has shown up in the pandemic, right? So that you had so-called advanced societies that didn't figure out that there was an unequal burden in care, and that would then have a knock-on effect on the ability of societies to respond, is something that we know, but we do not have the solutions to deal with that from the financial markets point of view. And
but can we talk about the opportunity on that? Right, because there is an opportunity. Right?
The point that I want to make, though, is that you have to invest in that. So since we're speaking about institutional capital and we're talking about development finance capital, unless there are specific bodies of finance to do that work, to define what is the opportunity, to harvest it, because a lot of the communities of practice and so on that we've been discussing take place with the assumption that entrepreneurs like yourself, Ajaita, or fund managers can invest their knowledge capital in this work without being compensated. So this is additional free work, but you were going to make an additional point.
Yeah, well, I was just going to say that, I mean, to your point about the pandemic, and it's a really important opportunity for us to also recognize that globally, everyone's recognizing this enormous setback that we've had, especially when it comes to women because of the pandemic. And if we look at this on a development country perspective, I can just give you this in India's context, right? I mean, we've dropped in the index quite drastically in the last 2 years because of the pandemic. But what it's also done is it's actually created a massive evangelist movement, both on the government side, as well as the institutional development side, as well as the private sector. It's the first time that you're seeing convergence to say that we actually do need to address these barriers faster. And so you're seeing a unique opportunity to bring in blended capital at scale to solve things in this lens of convergence. And so maybe this is the right time for us, everyone on this call, to be able to design to make it happen in a more interestingly effective way, where it's a combination of private equity, debt, grant, and public capital that comes together to solve things faster. And I do think that there's an opportunity for us to look at the excitement that can come with, the role that we all get to play in making this happen in a way that maybe allows us to move faster at an accelerated path, because there's an alignment right now globally around the fact that this needs to shift. So I just wanted to put it with that perspective as well. I mean, we're excited. We just signed 2 contracts with government, and we have literally the co-impact community of blended capital coming with private equity saying, don't ask how much money you need, Ajaita, just tell us what the solution is for 1 million rural women jobs to impact 100 million people. We'll bring the capital to you. And that's the first time it's happening in a way that I think for entrepreneurs like myself, we're going, oh, finally, fruits to our labor. But maybe it's because it's timing as well in terms of the ecosystem aligning.
And Gillian, could I say a few words about the other elements of the entrepreneurial ecosystem? We talked a lot about finance, which is clearly incredibly important. But I just want to talk about a little bit about some of the other elements of the entrepreneurial ecosystem that help to shape some of the opportunities and challenges, and certainly want to frame them as opportunities because they certainly are. If we think about, in addition to finance, right, there's the importance of the business support services, right? So who are the technical advisors, the business mentors, the consultants, and the legal and accounting services, right, that are there or not there to support women founders and to support all businesses, right? To what extent do they understand the opportunity, right, there is to serve women equitably, right, as founders, but also as customers of these businesses, right? If you think about things that if you learn in business school, it seemed quite neutral and data-driven around market segmentation and target customers. The conventional wisdom in these practices will often leave out, right, under what we call underserved. They're not underserved. We've decided to exclude them for whatever reasons, right? And so I want to us to be really thoughtful that exclusion doesn't happen as a sort of a force of nature, right, or by accident. Right? We choose who to serve and who to leave out. And so if we make sure that just as there was this exchange between entrepreneurs, women entrepreneurs in particular, and capital allocators and investors, we need to make sure that the data and the history and the information is provided to the entire set of folks who are engaging with and supporting or not supporting the kinds of businesses that support economic justice for women, for Indigenous women, for Black women, right? The other thing is to make sure we're thoughtful and aware of the fact that the way intersectionality works, and folks have got to really be thinking about this, is that we take a Black woman, she does not just have the problems of a white woman and those of a Black man, right? There are very different challenges that are specific to being a Black woman or an Indigenous woman or a low class or low caste woman, right? And to make sure we understand what those challenges are as we think about who our customers are, who are the communities we need to serve and live in harmony with, and who are the clients and who are the founders and what are their challenges, right? So we think about the business support services, also the hard and soft infrastructure, right? We've been talking a lot more about hard and soft infrastructure in the United States, the roads and rails, electricity, et cetera. That's the hard infrastructure. That certainly shapes economic entrepreneurial opportunities. But certainly there's a real gendered impact and class impact on of the availability of soft infrastructure, right? So to what extent is there a strong safety net, right? Not having to rely on family wealth to take a break to do entrepreneurship, right? That's hugely discriminatory, right? The ability for there to be equitable, high quality, affordable, accessible child and elder care. We know what the pandemic has made that excessively clear to the folks who didn't realize it beforehand, that's going to have some impact. So they're all across the entrepreneurial ecosystem, right? How the culture works, how policy works, markets, the advisors, as well as finance, all of that has got to be transformed if we're really going to see gender justice and more generally speaking, racial and social justice in the entrepreneurial space.
I couldn't agree with you. I couldn't agree with you more. I just wanted to ask, Jessica, are you seeing any understanding of that among the 2X collaborative in terms of the distinction that Lauren has just made between financial capital and investing in other ecosystem strengthening activities? Because that is, to my mind, central to everything that we do going forward, certainly in emerging markets. And then I'll go to you, Sanola, and we have some questions coming in as well, so then we can take those. Jessica?
So I think this recognition, kind of beyond finance, looking at technical assistance, advisory, and ecosystem building, I think that has been around for some time, but it, again, hasn't had a gender lens or a diversity and inclusion lens. And I think especially if you look at the technical assistance and, the grant funding for ecosystem building and so on, that has traditionally gone through to consultants from the global north, who are kind of, very remote from the markets that we all invest in. So in the case of the 2X Collaborative, we're investing in emerging markets. And so what has been interesting is the 2X initiative and the gender lens investing experience has kind of changed from an initial gender lens that has been, quite just looking at women to a broader intersectional lens. And I think that has been the biggest kind of change in mindset and in approaches. So a recognition that if you take a gender lens seriously, you actually apply a power lens. And so you look at who is included, who is excluded, what are the systemic barriers that are keeping some people in inequality and others not. And so for us, it has led on the one hand to a new framework that we call 2X Plus that looks at broader diversity and inclusion. So it looks at racial equity, but also at ethnicity in the local context, and all of the other intersectional factors that Lauren has pointed out. And interestingly, then from the investment side, that has also led us to challenge who do we actually engage as consultants? Who are the ecosystem players that we channel our grant funding to? And how can we, it's again, like the big ones, the big consultants in the global north are often the loudest and the most visible. But if you make an intentional effort, you can find amazing local consultants that understand the power dynamics in the local communities and in the context. And we want to be much more deliberate and engage those so that you have, a local context, and you're also aware of power imbalances and dynamics in the way that you shape ecosystems.
I think that in itself is deserving of a 90-minute panel, because if we were to get that right, we would actually have a lot to say about how we decolonize international development. Because if the 2X Collaborative has identified that as an issue that you want to work on with, with a genuine spirit, then you need to share that with your colleagues across many different development domains, because I think that has been the major challenge that has provided a bottleneck. Sanola, you were going to jump in.
Yes, thank you. I just wanted to appreciate what you said about childcare and the pandemic. One of the areas of analysis that we do when we work with companies is from a quantitative standpoint, try to understand parental responsibilities and care responsibilities, both for men and women in companies, how that affects their performance, ability to show up at work consistently, willingness to leave voluntarily, and what causes that. And we would make recommendations, for example, about men having access to childcare services that companies might provide. So a lot of the times we'll see companies provide childcare, but it's only for women employees, and they're not seeing possible consequences of that. And or they'll think we're crazy. Why are you telling me about childcare, right? And so IFC has done a lot of work and a lot of research, going back to your comment about investing resources and efforts, to look at feasibility studies, to look at different options, to look at what makes sense for what kind of company. And when we talk to companies, we interview employees. We do focus groups with men and women. We interview managers. We interview staff at different levels. And we usually hear from men about the inability to actually have this conversation, to talk about anything when it comes to children and care, because of a lot of the perceptions of the role of men in this situation. And pre-pandemic, we had a lot more resistance from companies on conversations about childcare. That script kind of flipped last year when everybody was in the same situation across the globe. And we've seen a lot more willingness of management to engage on this topic. We've seen a lot more willingness of men to have the conversation. We've heard women a lot more vocal than they used to be. There used to be some shame around having this conversation. And so I just wanted to recognize what you said, because we have seen it in those conversations, in the willingness to invest, and in the changing of the dynamics. So I really wanted to just underscore that before we moved on. Thank you.
Thank you so much. And so, good women, we have our first question coming in from the participants, who unfortunately we cannot see, but we are very grateful that they're there. And the question is related to, can we provide a feminist perspective on climate finance? So the financing that is required for mitigation, adaptation, and resilience. Are there issues that we would want to weigh in on with respect to how a feminist lens or a feminist perspective is needed in climate finance? Who might want to tackle this? Go ahead, Ajaita.
Sorry, this is 10 years of intensity on clean energy access and gender lens creation. So of course, so there's been an interesting movement on this question, simply because we recognize that there's two spectrums of looking at climate right now. One has been divest and the other has been invest. And on the divest side, if we look at the underserved, again, almost close to 3-4 billion people that are using horrible fuels when it comes to their resource for energy access and climate. And so kerosene and cooking has been the central reality that's been a central burden on women. And so there's been an interesting movement now to say that, can we design better financial solutions for women specifically to divest from their consumption of bad fossil fuels, which will directly mitigate carbon emission in a very profound way at massive scale. And then the other side is about creating incentive structures for the women who, again, make central decisions on shifting from low efficiency to high efficiency solutions that will enable them to better, again, take care of family dynamics. The irony of all of this up until now has been, we've looked at climate with a non-gender lens. And now that we start understanding that women are supposed to be centered not as the burden of poor energy access, but actually the drivers of solution, you're starting to see a lot more shifts in co-creation. So 3 tools that have come out most recently. One has been restructuring incentives for women to actually divest. Second is to look at restructuring finance to shift from low efficiency to high efficiency. And the third has been about looking at this on a scaled perspective. How can we start bringing in outcomes-based financing if we are able to achieve some of our climate targets with a gender lens? So this is something that I know the Gender Smart Summit is working on, I'm working on, and there's an ecosystem. Happy to talk about it in more detail for whoever asked that question.
Excellent, thank you so much. And now we are coming close to our final 15 minutes. And so what I wanted to do is to go around the panel in the reverse direction and just ask whether there are any issues that we haven't touched that you might want to bring into the conversation and share with the other panelists, as well as with the folks who are here experiencing this with us. Jessica, do you want to go first?
Yes, happy to. I still see an important gap. Oh, sorry. Can you still hear me? Yeah. So I think what has been very clear for us and on this 2X journey as well is that women like Polo, female fund manager who have been in the space for so long and have really been demonstrating the business case. They have paved the way for all of us in gender lens investing and have made all of this possible. And we're building on that with the 2X challenge that, basically was inspired by Polo's toolkit, and also looking at all of these opportunities and the business case. And that initially started with the development finance institution and multilateral development banks. And we've now, in the 2X Collaborative, we launched it at the UN Generation Equality Forum earlier this year, which I think is also a strong signal, kind of building on the Beijing tradition. And we launched it together with the ILN, the Investor Leadership Network, which is a network of global pension funds with over $5 trillion assets under management. So, that in itself, like these major capital allocators from the mainstream coming together at the UN Generation Equality Forum and launching the 2X Collaborative, I think that is really a huge opportunity connecting both of these worlds. In the collaborative, we now have communities of practice around the care economy, where we're collaborating closely with Lauren. We have the Gender and Climate Task Force in collaboration with GenderSmart, as was mentioned. And we're now also looking at gender-based violence, because that has often been a taboo topic among investors, and that is such an important issue and an important field. And we're showing that this is actually systemic risk for finance, and it should be treated, to the same extent as we also treat political risk, economic risk, other risks, because that is systemic risk. And finally, where we still have a long way to go is we've identified gender and racial bias in the capital allocation from funds to entrepreneurs, right? And that has been what everybody's talking about. But where we see a blind spot is that is actually perpetuated by the capital allocation from limited partners, so from institutional investors, to funds that are managed by women, people of color, and diverse teams. And that is something we really have to overcome together. So we've just launched 2X Ignite as a new initiative to change that. That is really a transformative and systemic challenge that we can only tackle together. But we really believe it's possible. And so back to your initial question at the beginning, aren't we talking about female investors, kind of privileged women? No, if we want to change, promote systemic and transformative change for women entrepreneurs and the most excluded and marginalized groups, we have to have that representation at the capital allocation level. And that means more women, people of color, and all of the other previously excluded groups in decision-making and capital allocation positions.
Okay, what I'm going to do is I'm going to ask you to give your 10-second call to action as well, before we move on from you, Jessica.
Great. So my call to action is, if you want to change the world, you have to change the way capital is allocated. And that means putting women and other previously excluded groups into financial decision-making.
Thank you. And so next we go to Polo. So Polo, any things that we have left out? And then if you could wrap up with your call to action. We do have some questions coming in, but I'll say a little bit more about that when I get to my turn. Polo?
Thank you, Gillian. I was very happy to hear Jessica talking about the issue of GBV. In fact, I almost cried because it has done untold damage to our communities. And I don't have a solution on how, what to do, but it is such an important issue, and it affects us every day. So I'm very happy that it is getting the attention from, owners of capital. I also, again, living in this country that we live in, during COVID, what we saw was the levels of unemployment. South Africa has got one of the highest levels of unemployment in the world, we're told. But what we saw with COVID and its impact on women in particular was also devastating, considering that women, primarily, they're primary caregivers, and a lot of our households here in South Africa are women-led. We got to a level of about 67% unemployment amongst women. And it highlighted the need for us to lift women out of the care economy and into more mainstream parts of our economies. Again, I do not have solutions around this, but it has become very, very clear that we need to be intentional about skilling women in those areas that are seen to be critical to the economy, whether there's COVID or not. We need to keep women employed, and it means that we need to be intentional about building their skills base. We cannot have the situation that we saw, at least that I saw here at home, and I suspect it's the same case across the world. I think that it is important that we are intentional, and I really like the work that Ajaita is doing. We're intentional about looking at the ultimate products that come out of the businesses that we fund, and not just be chasing, what kind of commercial returns we will make, but the importance of how those products change the livelihoods of ordinary people is so critical. And I think that using toolkits such as the one that we use for gender lens investing actually helps us to get there, because that's part of the things that we look at. And I think as a parting shot, Gillian, I cannot overemphasize the importance of change in the face of capital. Being very intentional about it, whether it is black or white, brown or whatever race, whether it's women, men, whether it's people in the LGBT space. We need to change the face of capital so that it can be more accessible to as many of our people as possible. Thank you.
Thank you, Polo. And so, Tina, you're next.
And I think Lauren mentioned this earlier, that a number of people, but she in particular used this notion of justice, but a number of people talked about a power dynamic. And at the base of power dynamics, if power is shared, it means that those who have most of the power have to have less. I mean, it's just kind of the law of arithmetic, right? And so what's less popular to talk about is that, it's almost like, the dieter who would do anything to lose weight except for eating less. And so, we focus on buzzwordy programs, all of which are noble, social impact, etc. And I think they need to be done. So please hear me. I'm not saying they're not important, but at the end of the day, they can all be done without changing the rules of the game and altering behavior. And so it's important that as we think about all these programs, you hear all these bulge bracket, Wall Street firms saying all the stuff, but they can still do all that stuff and still not change the rules of the game that led to the resources to do all the buzzwordy stuff. So that's one thing. And then related to that, which hasn't been talked about, is, the role of government. Business groups and organizations can certainly produce wonderful things like what Jessica is doing, right? Or provide best practices, but what they lack is enforceability. And, if one looks at the delta between expressed ESG objectives and concerns versus actions that to address them, that delta is really small in areas such as occupational health and safety or preventing bribery and corruption. Why? Because they've been around for a while, but the government regulates them. Where the delta is really large is on issues such as climate risk, gender and racial equity, because there are no enforceable standards. And it was actually with a notable exception of South Africa, right? Where there are enforceable standards and you see the result. And so You know, as a CEO, I'm not supposed to say any of what I'm saying, but I do think that and you see the resistance to the SEC, you know, deliberations around putting in place standards on racial and gender issues. The same people, you know, with 10 billion for Black women are fighting mightily to prevent them having to be held accountable. And so I think that that's needs to be, unfortunately, a part of the conversation.
And so, Tina, thank you very much for that, because you have also answered one of the questions that are beginning to come through, which is about what are the areas where the financial system is still stuck? Mm-hmm. You know, because one might have assumed from the conversation we've been having for the last 85 minutes that it's all moving along swimmingly, and that there is this realization on the part of those who hold power that there is this change to be made. And so that was one of the questions that came in, and I think you've answered it. Sonola, you were asked a specific question that has also come in about, again, how do you manage resistance, and what are some of the areas where how have you been able to get to reduce the resistance on the part of the firms that the IFC would work with in order to embed and intervene with the gender programming that you described? And then, of course, your call to action.
Of course, thank you. The two of those line up very well, actually. One of the ways we found is we talked about language earlier, trying to help, like, meet the clients where they are, but with the same goal of getting them where you want them to be. So changing the language in a way so that they understand what you're saying, what you're asking, what you're pointing out. That's the first thing. Using numbers. A lot of CEOs and higher level CFOs, they feel comfortable with numbers. So we show them their own numbers. We talk to them in numbers and then turn that number into strategy, turn that strategy into action. And we ask them to put in place systems to be accountable and to be authentic. And we really find that that really, really helps. Individualizing, so taking the macro concepts down, the business case, the macro. Jessica mentioned McKinsey's study. We start there and then we end with, what does this mean for you? How much of your own operational costs is having people absent from work due to childcare issues that are coming through? So we really try to personalize the conversation, and we've seen the light bulbs go off, especially with older male CEOs that look at their companies differently for the first time. So really starting where the company is, changing the language, and working with them. And I'll say one more thing that didn't get mentioned here in my call to action. I think it's important to look at the sectors and the locations and look beyond what seems to be surface. Healthcare, dominated by women, right? But very few women in leadership positions in healthcare, 33% in the US, 5% in emerging economies. So if you put intersectionality as a lens there, you already see what's going on. And we're talking more on the private sector side. So not just looking beyond the surface level and pushing and asking what happens if it's 75 million women in healthcare, why are so few women at the top? So asking those questions. And then my call to action is fix the structure, not the women. We have so much good information on managing your career, being empowered, etc. Those are important, those are great, but let's also break the structures down little by little, sector by sector, country by country, client by client, change those dynamics from a what does this mean for you perspective so that they start to kind of shift them out. So that would be my call to action. Thank you.
Excellent. I think that would make a good hashtag as well. So Lauren, over to you.
Great. So on academic Twitter, there is a push to cite Black women. And so one of the things I'd like to take this a moment to do is to spotlight a couple of Black women who are doing some of the work that needs to be done to transform entrepreneurial ecosystems. So there is, Aja Barber is a UK researcher and advocate looking at sustainable fashion. And she considers the gamut of justice issues there, right? So everything from pay equity and worker treatment in supply chains to environmentally sustainable fabrics and practices. She looks at branding and marketing messages to the extent that they play into racist, misogynist stereotypes. She looks at inclusive sizing and promotional messages to ensure that we're not, promoting, fat phobia. We have, people who are disabled want to have access to fashion, and right. And someone asked about how climate justice and gender justice, right, intertwine. They're all, right, of a piece. And so she has a new book. I don't know Aja. She's not related to me. I'm not her agent, but she does have a new book. It's called Consumed. And it'd be great for business owners as well as consumers. Most of us buy fashion of clothing of some sort. So if you want to be a responsible consumer, it's useful. But I would also say for, again, business consultants and founders and investment analysts, it provides some really useful ways of thinking about an industry that'll help you, really unpack the extent to which the company is really working towards justice or has some nice greenwashing or pinkwashing of its work. So that's one Black woman I would like to put a spotlight out for. The other is Elizabeth Carter. So another Black woman based in the US this time. She is a lawyer who is looking to deploy crowdfunding and revenue sharing and other non-traditional funding sources and structures to democratize capital to funders who are traditionally excluded. One of the things I'd say to look out for her work, she's done a really interesting structure for the Drivers Cooperative, which is a 100% worker-owned ride-hailing cooperative in New York City. In terms of an ask, and there are many more, I just thought I would shine a spotlight on two who are doing some really ecosystem transforming work. And the ask would be, one related to something that was brought up earlier, is be really thoughtful about what you measure, right? So if you're an academic or researcher, be really thoughtful about what you measure. So I saw some really interesting data in the last couple of days, and The Guardian did an article on it, based on some research, I think mostly in East Africa, looking at how much venture capital funding was going to companies with local founders, right? At first, people were like, "Oh, we need to include Africa," and great, millions of dollars and billions started going into Africa. Venture capital started investing in Africa, and what we saw is that the vast majority of that money went to expat founders. In Kenya in 2020, I think it was 6% of the $300-something million that was invested by venture capitalists in Kenya, 6% went to companies that had exclusively Kenyan founders, right? Nigeria did a lot better at 55%, but that was just about the best that happened. And in South Africa, right, a more complicated story there. Just about 50% of the venture capital funding went to companies with local founders. No data on race, right? In South Africa, and we've seen the historical data is that the funding generally goes to white-led teams in South Africa, and no information on women of color, no other information about class and caste and some of the other things that really matter in terms of who is included and who is excluded. And so be really thoughtful about what you're measuring so that you aren't contributing to a lot of the blind spots that we have in the ecosystem, certainly in capital and in the entrepreneurial ecosystem more broadly. And then the other thing I would say is, especially to those of us who are from or work in and work with and work alongside the countries that have liberated themselves from colonialism, men and women in these places, and everybody else, please, please, please push back against the local perpetrators or perpetuators of patriarchy when they say nonsense like feminism is a Western import, right? Since we're in the Caribbean, as the Guyanese historian Walter Rodney reminded us, and as many have said before and since, right? Colonialism really, and I'm not quoting him here, but colonialism really exacerbated and brought into being much of the social and political and cultural exclusion of women, and exacerbated the economic exclusion. So no pretense that pre-colonial societies were perfect havens of egalitarian, and there certainly was economic discrimination, but colonialism really brought a lot more of the cultural, political, and social exclusion of women. So let's do away with the notion, right, that we are somehow importing feminism from white women in the global north. This is ours. It's our struggle. It's part of who we are too. Lots more calls to action, but I think I'm going to leave it there so we can get to some Q&A.
No, in fact, we've just got a note from the organizers telling us that we're 7 minutes over. So we have to push Ajaita for your call to action, as well as there's been a lot to discuss and it's all been fantastic. So Ajaita, over to you, and then I will wrap it up and also talk about an opportunity for people to join us in a breakout session at 11 o'clock on Monday.
So my only thing I'll say, and this links to my call to action, is we have to figure out a better way to disperse capital at scale for people that need smaller amounts of capital. I think the challenge that I've seen historically is we make these really grandeur statements of really large amount of commitments of capital, but then we talk about wanting to include women that are in places of poverty, and the balance is still not working itself out. It's always too expensive to disperse the capital, too risky to disperse the capital, and it's not happening in a way that's actually fundamentally helping us. And so that's my call to action. Figure out more innovative ways to get capital to where it needs the most. We give it to funds. We give it to a lot of fund to funds. And I was just literally trying to check to see the trail of where all these collaborative gender lens investment capitals have gone through while we were in this conversation. And I realized it's not there. So that's my call to action. Get money to the people that need it most faster in a way that's more inclusive. Excellent.
Thank you, Ajaita. So let me bring this fascinating panel to a close by, first of all, thanking the organizers for giving us the opportunity. And I think that if I were to try to summarize what we have called for as a group, it is to change the architecture of the finance system. It is about systems change that involves power relations. And Tina rightly reminded us that no one who has power concedes that easily. And so therefore, it is an effort that needs to be financed, which is where the structure and the architecture of what we consider to be the systems change effort also needs to be thought about smartly. It cannot be with coalitions and task forces where the expectation is that is free work. That is not a good plan. That is not a plan that results in the transformation of the finance sector. That is not a plan that results in billions of women having better financial products. That is not a plan that will result in prosperity for all. If prosperity for all is the end objective, then we must get serious about all of the elements that we take to improve capital efficiency, to draw in solution designers that look like the people on this panel, and not only the folks who have traditionally been called to the table. It also means that we take what Paulo has asked us to do, which is to change the face of capital. Black women are not only beneficiaries. And this panel has demonstrated that not only are we leaving money on the table, we're leaving talent outside of the solution set.